Welcome everyone, my name is Mike Hamilton and just going to do a quick early week review ahead of the Fed US retail sales and Bank of England, is that right? Yes, Bank of England on Thursday. So Fed on Wednesday, Bank of England on Thursday. And so we're looking at the US dollar index, so heavily weighted with the euro and the pound. Weekly chart, this looks as if we are at least going to climb back to November 22 levels, and if we break through this next level up here, then we're popping up to 22 highs and potentially beyond. Any close above under 105, then this could tip over. I would expect, be at all surprised to see this come back into 105 before we venture up. But at the moment on this weekly chart, I've had two higher closes, flat for this week. Surprise, surprise, as we wait for the Fed. And so if we break this recent 108, we're going to see 109 pretty quick and potentially keep going. So you would assume if the Fed are not going to drop rates back into the year here tomorrow, then that's going to push this very much higher. Okay, but if you look at the daily chart, you can see how I've got this lined up. These are the bullish and bearish scenarios I printed up last week. So wouldn't be at all surprised to see 103, 105 again as we get into back end of this year and into the new year. But if that holds, then I think we can go back up to 110 plus. Okay, in the meantime, all the time above 105, expect higher. So what does that mean for the pound US? That means that this could crash into 127 and potentially roll over. But if we, anytime soon, we close above 128, then we could go back up to 2024 highs. Okay, so at the moment, we've got all this support down here that we're holding. And we've got all this resistance in this pocket above that we dropped down from in early November. And again, I've plotted two scenarios here. So even the bearish scenario could see us go back to 130, and then as we get into the new year, roll over. The bullish scenario is we get up to 131.70, pull back to 130, and then rise into that 137. Okay, pound yen has been a very interesting year. This has been a good one to trade intra-week, I think. Talked about all the support down here in September, and that popped up to 200. Popped right back to the breakup area, which is very common. It's a boomerang effect, which is a good name for it. And you can see how we had this lovely climb up from 178 and the early part of the year, then did this massive three-wave correction, and then started to do a 1, 2, 3 wave into that 200 again. Another three-wave correction. So we're getting higher lows and higher highs since this correction. So this one was a great pullback into that 188 area. We're holding above the 50-day average. So the pullback is 193 at the moment. If we do pull back and hold, then I can see this whizzing back or grinding its way back up to this year's highs at 208. And if we break that, then we're going higher. Okay, well, this was a sweet move. I'll just show you the rest of that chart. sweet move at the, so we dropped right back into the end of 23 and then had a great little pattern there January this year. Let's get rid of that one. So 4 touches off of this 178. So to the left, wrong side of your, oh no, it's still in screenshot. So July 23, October 23, December 23, touches that 178, and then eventually we motor up, and then we sweep back into August, and then potentially start the whole process again. So I think this is still viable. We're a little bit high here. Any test of 193 is viable with a stop under 191, and see if we can start climbing up towards that 200 again. Right, Bitcoin still climbing. Every little pullback in the Bitcoin is getting bought. So we steamed up there in 22nd November. All these little pullbacks after that first touch of 100,000 got bought. That's why don't scream in high, wait for these dips, and here we are looking as if we're going to see 110 and 120. So now if we do take a breather, you can see we had a good run up here in March this year, and we took quite a long time to resettle and reload, and there's a spike down there 5th of August, immediately closed higher, and then we started pulling back up again. So this is not a good time to get into this, I don't think. I'll wait till this reconnects with some support, and hopefully could potentially come down to 87. Moving across, let's look at gold and oil. So gold here is taking a breather. So we've marched up to 2800, pulled back, there's the 50% at 25.38. Next time we rode high, we immediately dropped lower, so we're really struggling up here. We couldn't quite meet the underside of that trendline resistance, and it's still dropping. So it looks to me as if we can see 25.40 again, and with Fed this week or Fed tomorrow, that could take a more of a deeper pullback. So we can't hold this 50-day average for a start. Any market that can't hold a 50-day average, potentially short any retest of the 50-day average. If you want to stay, I think the 50-day average is a brilliant marker. You can see how once we broke up here in July 24, all these touches here of the 50-day average got bought until we close underneath it on the 6th of November. Subsequent highs sold, and here we are flapping either side of it. So this is not a good time to be trading gold if you're not in it. If you are very bullish and you are sitting on a position in gold in profit, then sit tight. If you're looking to get into gold, then we need a decent pullback to at least well, I would say right back to that 25.35, possibly even lower. Let's take that out because I've got too many trend lines on there. I don't like a chart with a lot of trend lines. Right, okay, so at the moment gold looks lower. So the strength in that dollar has been capping this wheat all year, ever since that spike higher in May. I am still holding a position in wheat. So we just got close to that 50% and then dropped right back. So if we close under $5.50, then this is lower. If we close above, I keep saying this, we close above 6, then we are potentially going to motor. Alright, so I'm going to stay in wheat for now. Stocks. Let's start with BT. So we pushed up to 162 and now we're pulling right back again. So the main area of support is right down there at 140. So if we come down to 140 and hold again, I think that is viable. In fact, this is out of date. Let me tidy this up. So the most recent drop was back down there, and the most recent high was up there. So I would have thought we'll come and see at least 143 and possibly all the way back to 138. 138 is the ambush now. Oops, didn't mean to do that. If you're holding BT and you have a long-term view on it, sit tight, don't listen to me. If you're looking to get into BT, then 135, 138 is a possibility. If this motors, the target's going to be 180 and potentially £2. Retest of the trend line. Yeah, see this, we're literally retesting the trend line today. But give it a bit more time. I think it might dip under there and then start to hold. Okay, so let's move a little bit faster. Let's look at stay in telecoms for a second and just look at Vodafone. Vodafone is, ever since that push higher in 77, it's pulling back again. This is out of date as well. So I will update this. Right, so we just tested 50% today. Could easily see a retest of a boomerang right back to the 13th November. However, if we hold this here, and if you want to get into Vodafone, that is, if this holds and we can close above 70, then you might find this getting back to 82 and possibly £1. If this holds, you can see what a key area this is. We spent all of the summer down here. So if we get above 70 again, then that might go on a little run. If we close under 70, then we could see 60, 62. So this grey area is the one to watch. Hold it and we're going higher. Right. So we talked about, we didn't talk about oil, did we? Let me quickly go back about oil and then talk about oil stocks. So this is too messy. So we're in this little potential bear flag. Why do I say that? Because if we come back to 67 again, I don't think that's going to hold. We're seeing a series of lower highs. So we're 69 and up to 50 at the moment, right, give or take a few pips. Obviously the big 70 is the crucial number. Let's put the 70 in there. Yeah, it's just around the 70 mark. So if we close underneath this 70 today and come down and break 66, we are lower. put the, so the last big move was here. Yeah, even close under 68, and I think this could start to wind its way down to 60, and possibly even 55.50. It is really struggling. We are literally just popping back to last week's invent range. Okay, so the reason why I talk about oil, because if that holds, and we're just testing the 50-day average, if we hold 69.5, then I think we could wind up to 73, possibly 75. That then leads me to Tullow, oil stocks like Tullow. Right, okay, so it's crashed into a lot of resistance, crashed into the breakdown area of August, and here we are heading right back to 20. If we hold here and close higher on volume, then buy. Actually, this is no use at all at the moment. So if we hold this 20, Tullow is a buy, close underneath it, get out. Ultimately, if this can make a move, then I would have thought we'd see 30 in the first couple of months of next year, the new year. There's your 3 touches down there, completed in end of November, but it's fallen right back. Okay, let's look at, I haven't looked at indices yet. I've leapt off. Now there's a real mismatch going on here at the moment. This Nasdaq is screaming higher, and looks as if that could only pull back to 21.5. If that holds, we're going to see 23,000. If we close underneath 22 with a significant downward move, significant lower bar, then hold on to your hats, this is coming off. What I'm talking about is a repeat of, if at the moment this is trending up, so don't short. Back here in 11th of July, we saw a new high, an immediate big downshift the next day. Any pullbacks into the middle of July, saw that fall right back. If you see a repeat of that repeat of that bar and that action, well, certainly that lower close over here, any stage, then this is, wait, it's even shortable. But in the meantime, all these dips are getting bought, and if we close above this line here, then that makes this trend line obsolete, and we look as if we can see 22.5, 23,000. Okay, so it's clearly trending up, do not short at the moment. However, the Dow is quite different. Dow had a big downward shift end of November, retested the highs, another downward shift on the 5th of December, and here we are still looking like we want to come lower. We're 43.5 at the moment. We could easily see a push. I mean, if we boomerang, then we're coming right back to the Trump breakup. Now this went high very fast overnight, so I wouldn't be at all surprised to see that come back to 41.5. And we're 53.5 at the moment. Okay, any move above 44, and we could go and see 45, 46,000 on the upside. So the bullish script, the bullish scenario is we close above that 43,800 and we push higher. We close under, we continue to close low, and we could so easily wind our way down. So be careful. We clearly have a lot of support under here. So if all we end up doing is coming back into that 43 and holding, then we could blast back up. So at the moment, 500 pip drop is on the cards unless we turn around and hold this 50-day average. Right, stock. Let's get back to stocks. So I've been talking about Prudential. That's pulled right back to support. So this is on probation. So we had a good move into 690 recently. Here we are just trying to hold 635, 636 on this trend line support. Close under there, and that's coming down to £6. Hold and start closing above 640. I would expect that to go and see £7 plus into next year. So if I pinch back, you can see the pattern there. But this is, for this to be bullish, we've got to get above that 650 on volume. We had decent volume in there up to the 9th of December, and here we are still pulling back. Right, let's look at some other. Let's look at. So I'm just flipping around the ones I'm in at the moment. Advanced Medical Solutions. I was in it right up to 240, kicking myself for not getting out, because the volume is not brilliant up there. If we hold, it seems to be a very common theme at the moment. If we hold this, it's a bit of head and shoulders here, another retest down here, which we are testing at the moment. So hold this £2, and I think we can climb up ultimately to 240, 250 plus, close under here, and then this is just potentially going to give way to 180 and even lower on Advanced Medical Solutions. Let's go and look at the others we've been following. So we talked about General. Let's come back to oil. Nope, not doing it. Close above 65, and that General is going to get very, very interesting. That's incredibly bullish if we close above 65. Close under 62, and we're lower. Back to financials. Sorry about this. I need to sort my lists out. So, wow, Legal and General shot up there to 244, pulling right back to 225 at the moment. That's a gap fill up there. There's a gap created on. We gapped down on the 10th of June, and we closed the gap and dropped right back again. I'm finding UK stocks, this seems to be the pattern this year. They gather momentum, they look bullish, nice head and shoulders here, there's the neckline, they fire up and then just drift lower. There's just no follow through. I find this a lot. Direct Line did this, but then subsequently stayed up. Where's my Direct Line? There we are. So that's why the boomerang is really, really crucial. Don't get distracted by stocks that drift lower like this, because if they've done a big boom then look for the boomerang move. I hesitated down here and took my eye off it. Volumes are not great up here, so anyway, so we've broken up through the 230, tested the 253, and look as if we're potentially drifting off now. I don't know if they've agreed to be taken over by Aviva, but that's certainly what's going on here. That's a takeover. Talked about IQE. No, it looks lower. This is not mine, but a suggestion came in for Cousins. That's moved into 890, and that's pulled back nicely. This looks, it's potential. If you want to get into this, a stock like this, it's potentially a nice place to get in, because if it holds this area, if it holds this 83, last time we held 83 in April, we shot up to 116. So if you're interested, see if we hold here and then buy to PZC. That was a monster. That's gone. It's literally called Monster. I think it's Monster Drinks, isn't it? Is it the energy drink? BP. I think this is a potential place to buy this BP. Just concerned about what the oil's doing, so be careful. If we hold here, I can see this going to 430. Let's get this up to date. Oops, out. Let's shut that up. Yeah, so if we hold this area, we hold 375. I can see us punching up into the 430, 450 mark, but the jury is well and truly out at the moment. Let's get that up to date. So wait and see if we come down to 375 and ask yourself the question, are we going to hold on volume? So at the moment we're just boomeranging back down to this Monday night's breakup. Shell, I think it's a similar pattern, is it not? Yep, Shell's coming back to the October breakup. This is why I think this year I have been on most of my stocks taking smaller profits and not looking for runners, because we're seeing short-term resistance in UK markets is kicking in. Elementis, talked about this a couple of weeks back, that's pushing up. Right, let me look at the new ones I've got. Right, I've not picked this up on the broker's recommendations, I've not had time to check it yet. BRTC. That's a really interesting chart. This is PRTC Pure Tech. So yesterday we crashed into 175, 176 resistance. If we hold that and subsequently close above 173, 175, that could pop easily back to, well, I say easily, this might work its way back to 240, 265 plus, and £3. That could potentially return to 23 highs. This is a very interesting one. Alright, so my message to you is be careful of UK stocks. Oil is on the line. The gold looks weaker at this stage. All down to, as far as commodities are concerned, they're all linked to this strong dollar at the moment. So tread carefully. Could see a lot of extra volatility around tomorrow's Fed decision and back end of the year. Obviously, we're very, very close to year end now. So be careful and manage your risk. Any questions, let me know. Contact me through the website tradetheeasyway.com, or if you're in the Telegram room, then drop me a line. Hope that helps, and look out for future events. Thanks, bye.